Hello everyone. So this is gonna be a short video explaining a pair that I'm currently watching. So I'm looking for a cells from this specific point of interest till this target. I will be explaining all the confidences that I had and why I'm targeting this specific area and why I'm looking for this specific point of interest to sell. So let me just go into the charts. And before that, I want to tell you that this is just a simply intraday bias and it's more like a pullback trade. Okay, let me just delete everything. Okay, so make sure, even though you are trading an intraday bias, right, having much smaller target, but make sure to look at monthly, weekly, and daily. Higher time frame intentions are very, very important. So from the first view, we can see that monthly is very bullish, right? Right? And selling this pair is more like a foolish mistake, right? But I had my reasons and I will be talking about that. Okay. So we can see clearly that the lows are being respected, and this is the nearest support area or a engulfing buy that price made, and based on the candle structure, so simply we made this high, this low, this high, and this low, and we are currently at the uh, very top of previous high, right? I want to talk about the basics of Dow theory. So, so for a reversal to happen, there are two scenarios basically. So when prices making higher highs, it could for a reversal to happen, it could potentially react from its previous high and unable to break it and then go lower. It's more like a double top uh, structure, right? Or it could react somewhere over here from some supply and then just break out of this low, right? Or maybe it can go till the very high, right? And the second scenario is price simply making higher highs and price simply ignore every support that is present over here. This RB is this last support, right? So prices simply ignore that. So now, if we look into the current structure of this pair, we are basically having this same structure, right? So we are at very nearer to our previous high, right? And for a reversal to happen, price should react from here. And one more thing I wanna say that even though price reacting from here, that doesn't mean that price will simply starts to melt away and breaking this stuff. No, I'm not talking about that. We are simply having an intraday bias that we could potentially go till this area. But the point of talking about this is how to catch early entries for swing sells or buys. So this is how we do. Okay. I will talk about this thing in upcoming videos. How could you catch early entries? Like having a sell over here and potentially price simply reverses from here. Okay. And for that to happen, we need lower time frame to align and then higher time frame to align as well. For now, the higher time frame which we are looking at is monthly. So for now, there is no intentions of monthly to reverse, right? And also, if we look at the weekly, let me just delete this. If we look at the weekly, we can just precise this to tell this area. Okay, so we can just precise to tell this area and what are we seeing? So this is weekly engulfing cell, and it has been broken, so it is engulfing field, right? And we also have what? We have this dominant area on weekly, right? So we are currently heading towards the support now, right? So this becomes support and this is support too, right? But I'm also looking over this area as well. So this is area to be watched. I will explain why I'm watching this area as a supply area. Either you can delete all these big zones or just precise and then later delete. Okay. And there is also something important to look at, which is, let me just delete this all. So we look at the current candle structure. So this was the high, this was the low, this was the high, this was the low, this is the high. What is it making? This is more like a three drive structure, right? This is more like a three drive structure. You can simply, you can either mark like this, go to the daily and then mark it like this, okay? There is, so when you are looking into the charts, you should be, your eye should easily catch these things, the minor details of each candlestick. So I want all of you to keep back testing so that you can see all the uh, minor things that candlesticks are saying to you, the real transaction behind those candles. Okay, so I have explained this thing before too, that I do use these trend lines. This is a three drive, so it signifies some sort of weakness into the market. Okay, for now, let me just delete this. So, okay, so when you are looking for a certain trade, make sure that you have a list of your confidences. So my first confidence for now is three drive, right? I will keep on adding my confidences so that I gain the confidence to take a certain trade. Okay, so now let's look into the daily structure itself. So on daily, this was the last high. This is the all-time high, right? And we can see that price came into this area, wigged over it, uh, as per the SMC concept. Even though I don't trade, but I know some basics. So this is the liquidity graph, right? If I'm right. So this is a liquidity graph, and we also unable to break this fresh resistance, right? And we made what? We made a fresh resistance on daily itself, right? You can either look at on the line chart or on the candle, okay? So, so also one more thing to notice is this is like engulfing cell. There's something I want to tell you that in engulfing concept, we don't work with fresh and unfresh thing. Even though this zone has been tested many times and this zone has been tested many times, we will still mark this zone because the thing we work with is CMP, and on it's on SNR, I've seen people talking about fresh and unfresh levels, but it's not the case for engulfing. So we have a daily engulfing cell to work with, right? And if I'm selling from here, okay, so what's the target? Okay, but before that, I missed something, which is uh, we know that. Weekly is bullish too. And now let's see daily. What's the daily doing? Hmm. So on daily, I can clearly see this is engulfing failed. Why do I mark this engulfing failed? Is because, okay, let me just tell you why. Engulfing failed from the left side is more significant than the engulfing failed from the CMB. There is engulfing failed over here, and this also signifies that daily is bullish. So why do I mark this one? Because it's coming from the left itself. This is more from a CMP perspective. So when there is engulfing field from the left side, it is more significant than this engulfing field. Maybe you don't really get this part for now. I will talk about this in upcoming videos, more on storyline and direction. Okay. So if we look at this engulfing cell before it got broken, we had engulfing cell on CMP, right? And if we look into the candlestick structure, so this base over here, this hidden base or dominant area, if I mark it out, so this dominant area was the reason that we broke, we break this thing and this engulfing cell, right? So this dominant area is significant to watch. So this was my target over here. Now I know I know if you're selling from here, you might have the same uh, target, but I'm telling you that when you know the logic behind your targets, when you understand the real price action happening, you will feel more confident. You all may say that you are just making this more complex, but trust me, when you understand the logics of your zones, then things really change. Okay, so this is the reason that I'm watching this price, this zone as my target. And okay, there was uh, okay. So I'm gonna talk about Bollinger Band. I'm not going very in depth to it. I just wanna tell you one thing that if you look at whenever price breaks out of the outer side of Bollinger Band, it tends to give a pullback. This is the first scenario. Okay, let me just mark it. If we look at this price breakout of Bollinger Band, it tends to give a pullback. Whenever price breaks out of the lower circuit band, so it tends to give a pullback. Same scenario happening over here. When Bollinger Bands get broken, it tends to give a pullback, right? So what's happening over here? We have a we have what? We have a break from the Bollinger Band, and we can expect a pullback till this area. So what are the confluences we having? One is 3 drive, second is we are rejecting from daily last resort area, and on CMP we have daily fish resistance, right? And fourth one is Bollinger Band, right? So now we have four confluences to work with. I have not uh, discussed the lower time frame yet, and we have four confluences to work with. Okay. So we have four confluences to say that we could potentially come till this area, right? So let me just remove this. Okay. So these are the four confluences on daily, weekly, and monthly. And now let's go into the 4 hour chart. Let me delete this line too. Uh, okay. So on 4 hour, mm, before I, okay. So there is more confluence. So if you all know about RSI, so sometimes I do watch RSI as well. So if you know about the divergence concept, so you can simply see that price is making what? Making higher highs, right? But on RSI, we are having a lower low, right? So this is what? This is a divergence for sell, right? This is our fifth confluence, right? If we look at this small structure, this is making what? This is making high high, and this is making what? Lower low, and this is more like a major divergence. So I'm more focusing on this one rather than the small one. Okay, this is our what? This is our fifth confluence to work with, SI divergence. Okay, so I will explain why do I have this point of interest for cells. But before that, I wanna go into the H1 chart. Okay, so on H1 chart, you can clearly see that when we were approaching a demand area, price, the momentum in which price was reacting was quite bullish, right? So this is a concept of order flow. Okay, so let me just give you the brief introduction to it. So whenever price was approaching a demand area, it was giving us a huge momentum to the upside. You can clearly see this was a demand area, right? This was easy buy. So whenever price was approaching an area, it was giving us huge reaction to the upside. And now when we approached a certain resistance, and now if we look into our H1 uh, structure, you can see that you can see that okay, let me just mark first. So you can see that now when price is reacting from it, the reaction, the momentum is not that big, which was over here. So what is it telling you? It's actually telling you that the exhaustion is coming into the market. The trend is becoming weaker and weaker. It is not able to go far higher than their previous high. You can see this is previous high. It closed above and came back into our zone. It came above and closed back into our zone. So there is exhaustion coming into the market. Okay, I hope you all understood this. So what's our third, sixth confluence? It's exhaustion. Exhaustion. I don't know the spelling. I hope it's right. Exhaustions coming into the market on lower time frame. Okay. Oh shit, I'll just tell it. Okay. So daily was bullish. Okay. So exhaustion is coming into the market. So now let's look into the H4 time frame now. Cool. So we can see that when we were approaching this area, this was a engulfing buy, right? This was a engulfing buy, and price closed below it, making it engulfing failed. But to me, this engulfing failed is not that significant. There are reasons to that. I will explain in upcoming videos. The significant uh, engulfing failed for me was this one. Go and backtest this one. Uh, I will not explain the reason for this one for now. I want you all to understand why do I say that? Why this engulfing field was more significant than this engulfing field. Okay, so this engulfing field was another confluence that I want to sell this pair. So I can just add that into our list for our engulfing field. And now I'm going to talk about why do I mark this as my point of interest to sell. In previous video, if you watched it, uh, you will you would have noticed it that this engulfing cell, okay, was a blend engulfing cell, right? So if we look into the candlestick structure, so this this hidden base, this overall hidden base was the reason that we break this low, right? So this was my first and significant area to look for cells. I hope you all understood. I hope you all have watched the last video with the focus and now uh, would, and those people would have understand why I marked this zone as my point of interest. So this is my first target. So this was my point of interest, and this over here is my second entry. Why do I mark this zone? Let me just explain you something, and you will be questioning that this was not a perfect engulfing. For the same color engulfing, it has to be a perfect engulfing, right? But the reason I marked this one as my supplied zone is because the proportion of this body is very smaller than its wick. So this in lower time frame, this is going to be a base to work with. So every base is simply a supply or demand area. So that's the reason I marked this one. If you didn't understand what I just said, no problem. You had your this engulfing cell to work with, and this was a fresh resistance. So you could have entered over here and you can target this area. And now when I talk about how could this potential intraday sell can lead into a weak into a swing trade. For that, okay, I will explain that in upcoming videos. For now, this is all I want to explain. So this is I'm targeting. So we had like 7 to 8 in conferences to work with. So in the during my so in starting I said that this is high risk, right? So this is because it was high risk because we were bullish on monthly, weekly, and daily, right? But I had a lot of confidences to work with, so that why it gave me a confidence to risk even higher over here. to target this area. So the things to learn from here is that the more confidences that you have, it will give you the more confidence, more confident to take a trade. You can risk more and make more gains. You don't need every single, you don't need to trade every single high or low. You just need a good quality trade for a week, or maybe 2 to 3 trades for a week, depending on your risk appetite. So for a person that is risking like 3% or 2% on a trade, okay, I will talk about the SL stuff later on. So now let's say you put your SL over here and targeting this, okay, like 3 risk to reward. So you would have made 6% on your account, and that is more than enough for a week or a month, depending on how much capital you have. Okay, so this is all for this video. Thank you guys.